Welcome to Second Take, the show that focuses on the issues behind the news. The board of JSE-listed gold miner Simmons is deciding whether to give its shareholders the opportunity to directly access its TSX-listed First Uranium associate company through the issuing of loan notes. Mining Weekly editor Martin Creamer is in the studio to explain this concept. Welcome, Martin.
Thanks, Shannon.
Giving shareholders the option of shares in First Uranium will be a JSE first. Can you tell us more?
Yeah, Simmons gold mines, we call it Simmers, and First Uranium are really joined at the hip. But under the previous CEO-ship, they were split into two companies, listed differently, even though people thought, they could have been the same company. So you have First Uranium listed on the Toronto Stock Exchange in Toronto, and that's a primary listing. It has a secondary listing in Johannesburg. But those shares are illiquid, so there's not a trading in those. So South Africans couldn't really get direct access into First Uranium. But now, because of the recapitalization of First Uranium, they were cash-strapped and they needed to recapitalize. Because Simmons owns 34% of First Uranium, they took up their rights. And so they have loan notes now that they've bought, which they own, which they can offer to South African shareholders, Simmons shareholders. And by offering those to local shareholders, they give them a direct access to First Uranium, which they never had before. And even the presentation of this sort of loan note is very unusual, and we haven't seen it on the JSE before. So they're calling it a JSE first.
How much will Simmons shareholders pay for these loan notes?
They will be, firstly, it looks like they're looking for 360 million rand that they want to offer. They could offer up to 460 million rand because that's what they translate into if you convert the Canadian dollars into rand. So they're not going to offer all of them. So they're keeping some of them. And they will sell them in units of 1,000 rand each. And these will have a coupon. And that means they'll give you an interest rate. So between now and March 2013, you can earn 11% of these. So that's quite a nice coupon because prime rate is 10%. So it's one above. And then the government bond, I can't remember which one it is about 8.8. So you're about 3% above that. So even as just a straight interest rate, the coupon is quite good. But then, at the end of all that, when the shares have normally risen, over that period, you can convert those shares, if it makes sense, if it makes business sense, back into First Uranium shares at R9.50 a share. So it sounds like a good deal.
Not bad. The possibility of Simmons no longer having a rights issue is now real. Why do they want to avoid this, and what benefits will a note have?
You see, when RMB and Simmons agreed to this rights issue, it was really in the teeth of the global meltdown. So banks were very defensive, and the sort of deal that has been put on the table by RMB now doesn't look in any way attractive. What has happened with that deal is that for 3 years, the total asset base of Simmons will be tied up as security. And so that leaves them in a fairly negative position for quite a time, till 2013. Not ideal. And it's all around the raising of a bridging loan, to pay for those notes. So then they looked at it and they said, well, the notes we've bought are already secured. They're secured by a South African asset. It is a South African tailings asset, which is pretty secure. And so why secure it again? Why give our company a security again? Why not just sell these notes to our shareholders at par and they get a revenue stream in instead of having a revenue stream out? And their balance sheet will improve. Their shareholders will be happy. And I think it seems to be a deal that is vastly superior to the rights offer.
Definitely. Martin, is this a reflection of the greater efficiency of the Simmons board?
Yes, we had that tremendous internecine struggle within the Simmons board. They were tearing each other apart. Flying in was Vuli Sango, which was the black economic empowerment partner, but with the biggest single shareholding. Defensive was the previous management of Simmons & Jack, which coincided with the management at that stage of First Uranium. There was a massive fight. It surfaced twice last year. But the recommendation of the BEE partner was that they bring in new board members. And the ones that were proposed by the Vuli Sango camp have made it to the board. So you get some sharp brains there, The people who are now on the board have been around the block a few times in mining. In fact, you've got David Brown of Impala, and you've got the former Harmony CEO Bernard Swanepoel as deputy chairman, and you've also got the Aquarius CEO Stuart Murray on the board. So they've all done a lot in finance as well, and they've all had experience with acquisitions. And I think they are giving themselves a chance to assess the appetite of shareholders to this deal that they're offering. And if the appetite looks good, I think it'll be a fait accompli that they will go with the sale of the loan notes and avoid this onerous, rights offer.
Now, this company used to be split. Is this now a sign that they're being unified?
They look far more unified to me. I mean, they really do, because the people on the board were those recommended by Vuli Sango. Vuli Sango is a particularly strong shareholder. And now you can even see the Vuli Sango members returning to the board. I mean, we see Valence Watson now back on the board, and he's the CEO of Vuli Sango. So I think the piece is there, and now they're looking for efficiency going forward. Going forward, I mean, there's a lot of speculation. Why should these two companies be separated? They are joined at the hip. And of course, their names have been rather besmirched. They've been dragged through the mud. So one wonders whether it will be too long before the two of them come together. And you can even see, the sale of these notes pointing to a sort of a rapprochement between the two, and are coming together. So my money would be on them at some stage, possibly saying, let's throw the name Simmons & Jack out this window and throw the name First Uranium out that window, and come out with a totally new name and a consolidated shareholding, and let's go for gold and uranium collectively.
Thank you so much for clearing that up, Martin.
It's a great pleasure, Shannon.
That's the show for today. Join us again next time for more news and insights into what's happening in the mining world.